this. Right, welcome. It's the final session of the week where we recap the week, both in what we are learning and what we are seeing in the chart in price action. It's been an interesting week for me. Got a couple of confessions, well, a confession to make in a little bit. No, right, nothing dodgy or anything like that. The word confession sounds too deep, so let me rephrase that. I got something to, what's the word now? Just admit to. Cardinal rule of mine that I broke. It didn't cost me any money. It just cost me the chance to make money. And I was reviewing my charts this morning, and I realized you broke your own rule. Well, if you're going to break a rule, the best outcome you can hope for it is that it means you don't take a trade you should have been able to take. The worst kind of rule you can break is the rule that actually loses you money. So I didn't lose any money on this one, which is good. So, right now, let's look at the dollar index. By the way, if you didn't catch the Traders Lounge yesterday, the first edition of it. Now, it's different from the Traders Podcast. I haven't done the Traders Podcast for almost 5 months. Wow, the Corona period has been crazy. That will return hopefully next month. Moving forward with the Traders Podcast, I'm gonna get on most of the episodes of that a different trader, either an in-house trader like Talkboy or Joshua, or one of my friends, or people whose opinions on the market I trust you guys to listen to, bring them on. But the Traders Lounge is more a psychology class. Think of it as an armchair psychology class. And we had our first session yesterday. I was talking about things I learned along the way. It's a public video, so whether or not you're a registered student, you can find that on the channel. I strongly suggest that you go listen to it. I cannot suggest strongly enough. You really need to listen to it / watch it. It is so important. Just give me a quick second, everybody. Sorry guys, I got my kids with me today. I'm a work from home daddy today, so it's interesting. Hello, Kieran. It's actually my youngest son's birthday today, so all sorts are going on in my household, which is kind of why I want to keep this a little bit short. But like I said, dealing with psychology, mentality, which in my opinion is the first 70% of trading. The last 30% is technicals. It's not the other way around. It's not that you get the technicals and psychology takes you to the next level. No. You need to get the psychology in place first to be a successful trader. You can learn the technicals as you go, first of all, but when it comes time to putting it together, psychology actually gives you the platform that your technical prowess or skill then helps you take them or make the most of. So thank you, Kieran. Thank you. Well, he's not necessarily junior, but yeah, to my son, thank you so much. I'm grateful for that. So, where were we? So let's look. Now, like I said, I broke a rule this week. Let me tell you what the rule was. And it's a very annoying rule to have broken, especially this week. This would have been a great week. Now, this is the dollar index. Let's look at the daily chart. Now, we started off the week and we marked out that level, right? Now, as a rule, I don't try and guess where price is going to turn. Definitely not on a daily chart. When I see price approaching a support or resistance, I assume it's going to keep going to it. It's going to carry on until I see a reversal signal. I broke that rule this week because I so badly wanted this order block to hold up price. I think I drew it out at the start of the week. Let me draw it out again. Because I could think of all kinds of juicy trades I could take on a lower time frame. And so because And this is why you shouldn't marry a trade idea. I married this one and I didn't divorce it all week. So I did take one trade on the short during the week, but I kept waiting for reversal that I never got. And for that reason, missed out on today's Friday, Thursday, Wednesday, Tuesday, Monday. 1 second. Missed out on a very juicy trading week. I had from here to here to play with in price, and I took just one trade, and that was on Tuesday or Wednesday, I believe it was. I think it was Tuesday, which is a horrible return. I mean, these are the kind of weeks you dream about. Look, one direction all week, no fake out days. No, well, this is Friday. Let's see what Friday does. But so far, no fake out days, no Z days, everything just perfect. You hardly ever get this. And when you do, you should make the most of it. And I did not. That's on a dollar index, and that's painful. So note to self, follow your own rules, Israel. Everybody shout in the comment section, follow your own rules, Israel. But like I said, if you're going to break a rule, the kind of rule to break is the one where you don't get a trade. It's not the one where you lose money. That's a hard pill to swallow. So let's look at what happened in which we were tracking three majors this week. The first obviously is always EU. So let's look at EU real quick. And as you see, EU followed the dollar index all week long. Friday, Thursday, Wednesday, Tuesday, Monday. Let's just open up a fresh chart, just a brand new chart, just to see how we could have taken advantage of this. Again, I'm confessing I did not. I'm not going to lie that I took trades I didn't take. I took one trade this week in GE, was a win, but it didn't pay anywhere near as much as this kind of week should have paid. When you get a hold of a week like this, you really want to shake it by the tail till it gives you every last thing it can give. Thank you, Natalia. Follow your own rules. Yes, I will. Thank you, ma'am. So, coming into the week, again, we delineated that high over there. Now, we knew on EU it was going to break it. My assumption, again, which is, let me take that off. My assumption, again, which is wrong, and I want to be honest about that. That's not how you do it. That's not how I've taught you to do it. It's a crazy kind of weekend that I was taking a semi-break from almost every other thing else but trading. So I was kind of mailing it in. That's why I made the mistake. It was a lazy week for me. I was just hoping price would follow through on my plan A without me having to do the mental work to go through B and C. So in essence, it was almost a pseudo holiday, which is fine. Had a trade that gave me 3-1, didn't lose money, so that's cool. So that's what I was expecting. This is Friday, that's Thursday, that's Wednesday. So I was expecting Wednesday to do that, to give me a down candle, and then perhaps to take a trade with that on that Wednesday, and then also on Thursday probably to come back to this level. That's what I was looking for. I didn't get it, and because I didn't get it, now it didn't. I put in some alerts to tell me when price broke structure to the south, but because it never broke structure to the south, I never got those alerts. And by the time I went to my charts, so what I should have done is put in alerts both ways. You can do that on your MetaTrader platform. Let me show you how to do that here. If you come to tools, come to options, you go to notifications. If you put enable, now it's not enabled on this particular platform. This is one of the ones I teach with. If you click on that and put so if you go to your phone, your MetaTrader on your phone, let me find out. Let me refresh my memory on how to do this. So you open up MetaTrader 4 on your phone. You click on that, the MetaTrader icon to the top left, and then you click on settings, and you scroll to the bottom. Under messages, it will give you something called a meta quote ID. So it's a number that, oh, it's a string of numbers and digits. It's usually about, let's see, I think mine is 6 digits or six, yeah, 6 characters. So a couple of numbers, letters, but eight, not six, 8 characters in all. If you put that in here and you click test, it'll send you a test notification to your phone, so you see it works. What that will then do afterwards is this. You can then come in and you can set alerts on your chart. And you can put a price level or first of all, it'll alert you when you make trades. So if you put a pending order that's triggered, or when you've lost or won or whatever. But you can also put alerts and say, when price reaches this level, let me know. And so on this particular day, I'd put an alert for just a few pips beneath this level here. Well, not with more than a few. Let's go take a look at it. So it was, yeah, so Wednesday. So I put about 5 pips beneath there. It never got there. And so because it never got there, obviously it was never going south. So it's good in the sense that I wasn't sucked into a trade that I would have lost because I was waiting. I followed that set of the rules. The rule I didn't follow was you never assume price is going to turn. You prepare for it, but you follow a daily bias through. And so as you can see, the daily bias here this week never ran out. Let's take away that. So in essence, I was expecting Wednesday to be this kind of day. Price to run back and take out this low. That never happened, so it never changed direction on the daily bias. As you can see, so this was Monday. Tuesday took out Monday's high. This is how you look at it. Let's put the highs in green or blue. Let's use green, and the lows in red. This is how you track structure and a bias when you're trading intraday or intra-week. Now you can do the same thing with your daily chart or your 4-hour chart if you're trading swing trading or long-term trading or even position trading. So that is going to be red because that's a low. And this is what I mean by today is rare, or this week, sorry, was rare. Many weeks where you see at least one manipulation midweek. None this week so far. And as you can see, each day this week, that's why it's textbook, each day this week, the previous day's low was respected and the previous day's high. So far, let's see what happens on Friday. And the previous day's high was violated. This is beautiful. In essence, if you simply applied the candle principle this week, open, high, low, close, let price open, wait for, let price open, wait for a support beneath the open, maybe wait for an intraday liquidity hunt, and then go long with your stop at what you consider to be the low of the day, or a previous day's liquidity profile, it would have been handsome. Now, there's no chance, there is a chance, there is no guarantee we see this again next week. But if we do, I can guarantee you I am not going to let it pass me by again. And so, Tuesday took out Monday's high and closed above it. Wednesday took out Tuesday's high and closed around it, but still, actually no, it didn't close around it. It just nicked it on the way down, but it closed above it. And then Thursday took out Wednesday's high, closed a little bit beneath it, but still well above its low and well above the low of its own day. And Friday's TBD, to be decided. So I said, this is perfect. This is textbook. Each day is leapfrogging the next, leapfrogging the next. Now, of course, if you wanted to see where the target objectives were, if you come all the way back to this level of the chart here, let's just put in, look at this there. Let's make that green because it's a high. Let's go back into the 1 hour chart. So let's make that green. And that. And that. And that. So those are the highs. 1, 2, 3, 4. Let's go ahead and mark out the lows. Actually, that high and that low is the exact same. So we're just going to leave that one. We're not going to touch that one. That's a low. And that. And that. Right. So if you go to a daily chart and you go back in time, you will see that none of those levels was arbitrary, right? Each of them, with some degree of efficiency, could have been predicted by looking at previous price action. That there is the high of that daily candle. That there is the open and the close of these two daily candles. This here is the high of this one, the high of this one, the open and close of these two. This one here, you can see, look at how these lines, it never ceases to amaze me how well this works. And if I could go back 13 years and tell myself something, this would be one of the top 5 things I tell myself. Historical price levels are king. Anyway, so back down here. So how would we have taken advantage of this? Well, drop to a 15-minute chart. And let's count through the week and see what we could find. So this was Monday, right? Price opened up here. We're going to put these in blues because these are the opens. Price opened up here. Maybe you guys can hear that in the background, but my boys are playing about. So if you can hear, forgive me. It's called being a dad. And Tuesday, price opened here. On Wednesday, price opened, we're going to go ahead and say there. On Thursday, price opened, let's see, we're going to say there. Now, at the moment, we're just taking the open at midnight. As we go along, I'm going to, in a couple of weeks, when we get there in the course or in the mentorship, whichever of the ones we get there first in, out of the course of the mentorship sessions, I'm going to show you that you can refine this blue line here to a different time of the day. It's not too far from midnight, a couple of hours out from midnight, that will give you even more clarity on what level price is dipping beneath or above to form the open or close of that day. And here, price opened up here. So I am suspecting, I might be wrong, the Friday is going to be a down day, the first reversal day of this week, but I might be wrong because at the moment, price seems to be more interested in staying up there. Let's drop down to a 30-minute chart to see this more clearly from a larger point of view. So, like I said, even though I drew them in hindsight, each of these dotted lines should have been drawn on your chart before you came into the week. If you've done what I teach you to do, which is find the area price is currently in, go back in your chart, right? And mark out. So count. Remember I said you count anywhere between 250 and 350 pips from where price opens the week. Price opened the week here. So let's see, 250 pips above would have taken you further up. 250 pips below would have taken you further down, right? To about here. It is possible to have a 250 pip week. It's not regular, but it's very possible. And in fact, in certain times of the year, it is very regular. Might not be regular now, but it's very possible. And so you go back on your daily chart and you take out your highs and lows all the way back to when you cross. So that, let's see, 250 pips from where the week opened up. The week opened up roughly about here. 250 pips would have been here. So just about there. So you would have been taking every high and low up until this point of the chart. In which case you'll have stopped at this one. And as you can see, that mapped out perfectly. And then you would have done the same highs and lows on the daily chart all the way down. Another 250 pips. So that would have taken you to, well, actually, on that one, there would have been highs and lows to worry about here. So that would have been 250 pips would have been, so that one there. Yeah, this one there. And then swinging back. But by the time you've got these ones here, you notice that most of the ones here will map out nicely with the ones there. It's just the way it works. Of course, if you wanted more confirmation, you would have gone to a weekly chart. Let's blow that up a little bit. And on the weekly chart, you would have been mapping out not just the opens and the closes, but the highs, not just the opens, the highs and the lows, sorry, but the opens and the closes as well. And so by the time you did that here, you would have dropped down to a daily chart and found that all these lines would already have been marked out for you. Again, it's just the way it works. You might have ended up with a few more lines than these, is the honest truth. I accidentally closed the chart I did that on, which is why I'm doing it again. I think I did end up with a couple more lines than these. But that's the whole point of analysis. You expect to, in essence, if you draw 10 lines and only 5 are useful, that's good. You'd rather have too many lines than too few. So you'd rather have 5 lines out of 10 you didn't need than only draw 5 lines and find out that you needed 10 to give you a real picture for the week. And while it's tedious, do you want to make money? Yes, then do it. It's that simple. If you want to make money, you do it. Right? It'll take you on every single pair you trade. And that's why I said don't trade too many. On every single pair you trade, it'll take you a maximum of 10 minutes, maybe 15 on a bad week, but a maximum of 10 minutes. So 10, 30 minutes, you're done for the week. You go into the week with 3 pairs, all your lines are drawn, and you're expecting something to happen at every level. If it doesn't, you move on. So let's go to 30-minute chart so that we can actually see these things. If I go to 15-minute chart, I'd have to scrunch up the chart too much for you to see how the whole week unfolded. So let's use a 30-minute chart. Actually, let's use a 15. Let's use a 15. Can you guys can see, can't you? Let me know in the comment section you can see the candles well enough. So the week started here. Now, remember, these 2 lines were drawn going into the week. So week started here. Actually, it opened there. So it opened here. Coming from last week, our bias is up. So until we see a reversal, this is like I said, this is where I messed up this week. Until you see a reversal, you keep following the existing bias because this could go on for months. Price can move in one direction as long as it wants. Once it gets into a trend, look out below or above. And so until we see a daily reversal, we assume bullish. Could Monday have been the daily reversal? Yes. And it looked for a while like it might have been. This is why, like I said, I usually don't trade Mondays. Let it show you how the week's going to pan out. Monday was a valid day to stay out of the markets. You could have made money if you traded. Just hold on a quick second, everybody, please. Sorry, guys. It's just the Corona Chronicles. Trader Dad has to attend to a couple of screams every once in a while. So I'm back. I've pleaded with them to be quiet till I finish this recording. Let's see how much credence they give my plea. Right. So remember, on Monday, you're just watching to see what happens. You can trade if you want, but would you have made much today on Monday? Let's see. If you'd gotten in here, let's assume you got in here. So it opened up, it went up there, right? It comes to that level there. So that's a previous level your week would have had. In which case you could say, okay, maybe it's a short. So if you're shorting, your requirements for a short is you're above the open of the day, right? I would also add, now that I've taught you about the Asian range, well, I haven't taught you about it, but I've explained it a little bit. I would also like, one of the things I like to add to my trading is not only is it above the open of the day, I want it to be above the Asian range as well. And so maybe you could have gotten in here. Let's see, did we have a daily engulfing up there? Yeah, we did. So you gotten in, let's say, here, 15 pips, and you would have made, well, to this line, 2 to 1, to this line, just over 3 to 1. Okay, so yeah, you could have, you could have got your groove on a Monday, but, or if it then comes here and then bounces, you say, okay, well, maybe it is an up day. If you got in here, the best you could have done, even if you entered on a 15-minute chart, let's see an hourly. So it actually didn't wait for you on the hourly. So if you're waiting for an hourly engulfing, you wouldn't have gotten a trade. Even if you were cute and you got on a 15-minute reaction, not an engulfing, just a reaction, that's 18 pips, and you would have made a maximum of 28. So you could have done a quick 2.5 to 1 coming south. So in essence, it would have been so it actually was a manipulation day, because it just so happened that it closed above the open a little bit. It came back and, so that's fine. Tuesday is where the magic starts to happen. So I just watch. I'm going to do this real quick, but I've explained it several times, so hopefully you can see it with your eyes. You see that there? Let's change the color. That's the order block from the low of Monday. And this is how, and I am really, really kicking myself this week. As in, you have no idea how upset I am. Especially with the fund account I'm trading. I really could have, I could have ended my month real good on that fund account if I'd taken some of these trades. Perfect. So Monday still closed above its open. So the daily bias is still worth it. But Monday also gave us a manipulation and back the right way. It opens there. It dips beneath the open here. Right? If I take this line away, you'll also, let's just move this line away for a second. See that there? Okay. Now, you might not have taken this entry, because this would have been 5:45, 15 minutes to 6. But it gives you a second one here, right? Gives you a second one here, and then pushes up above the open of the day. If you look at this, remember, you are expecting a bullish move. You come in today You're not trying to be cute like I was saying, let me see if I can catch the reversal day. No. If necessary, you take a loss on the reversal day, but you stay in sync with the move until it tells you itself that it's done. Finally. Things getting on my nerve. Okay. All right. Sorry, I'm just OCD with my charts. My brain just works a certain kind of way. Okay, cool. So, again, if you were waiting for a 1 hour engulfing, this 34 pips, so that would have been above it, so you could have missed that day because that's above your personal size for stop loss. But I think it was crying to be bought, though. If you do it on a 30-minute chart, it would fit. But literally, don't even just here. This is just telling you, buy me. Right? Buy me. The reaction closes above this here. You could have been in here, actually. This is a let me see. Let's go to back to now. This is an hourly engulfing, quote and unquote, here. And that's it. Whatever it is, my point is you would have had several opportunities that day before this final one, even if you're not trying to be cute. Let's take that one, for instance. You got in there. 22 pip stop loss. Or you could come in today just saying, put this here. I'm looking for this to happen. 24 pips, 25 pips. And that one day you would have had a 421. But let's assume you waited for Tuesday to prove to you what was really going on. You had no excuse, and I had no excuse not to take Wednesday. And Wednesday is the one that really hurts. Hold on a second, please. Sorry, guys. The struggle is real today. The struggle is real today. Monica, thank you. His name's Jeremy. The struggle is very real today. All right. So Wednesday was the day where there was no excuse. There was just no excuse on Wednesday. Why? Look at this perfect picture. Price closes here, right? Comes up, dips beneath the open of the day to where? That level there. And on a 1 hour chart, look at that. Just look at that. Again, buying, begging to be bought. Just absolutely begging to be bought. Now, the question on Wednesday is, what liquidity profile would you have framed your trade on? That's the only. Now, of course, there's a low from a previous time point. So you could say that was good enough. But if you're really discerning, you're asking yourself, how do I trust this reaction here? How do I trust it? Where do I frame it on? Well, that was the question I was asking myself. For this one, you have to be a little bit creative. And this is why, like I keep saying, you don't, so let's see, you don't get so tied down on the lower time frame that you forget what's happening in the high one. So that's Friday, Thursday. So this is Wednesday, right? We're looking for. So this particular line here, just to show us what it looks like going back in time. Okay, so this one here, right? You are going to see this all the time. First of all, there's a manipulation block here. And it's from 2 years ago. But it's valid. One second. Okay, first of all, I'm just going to pass it through the price action that week. And I'm going to go back and make sure it's correct. Right. That's decent enough. That's decent enough. So, no, that was Thursday. Sorry, that was Thursday. That was Thursday. Let's go back. So that's one. That would have helped us out on Thursday. About yesterday, this is one of those classical support turn resistance kind of things, right? And for people to tell you don't cut through candles, if you're an experienced trader, don't cut through candles, they don't have a clue what they are saying. Allow me to draw your attention to this candle here, right? This order block. In fact, there's several of them I'm seeing. Now, let me pick this one first. Let me pick this manipulation block first. Let's start with this one. I'm going to get rid of this one because that was for Thursday. At least we've seen how that one reflected on Thursday. Let's just, for now, just cut that through. And then we will come back and refine it. Right, let's take the body of that candle, shall we? You could argue we could take the wick because the wick is almost the size of the body, but let's take the body. Can you see that right there? That's what we've just drawn, that body of that daily candle. And if I went down to that daily candle and refined it down to a 4-hour candle, it'd be even clearer. But that right here, this red line is directly in the middle of that manipulation block. And then you see this happen. Day opens, dips beneath, comes back up, passes through it. Ding. At the very least, there's two ways you could have done it. The first way is put your entry there and your stop loss at the bottom there, 35 pips. If you refined it further on a 4-hour, 1-hour chart, it would have gone lower. The second is wait for the reaction. Put your entry just above the body of that H4 candle. That's my version of the engulfing, not the classical one, the one I explained to you guys yesterday morning, I think was Wednesday morning, about what I refer to as an engulfing, not the classical engulfing pattern, just a full reversal of price in a particular session. And call that the low of your day. That's 25, 26 pips. If you want to really be pedantic about it, wait till this happens. Still put your entry there. That would have reduced it a bit. Thursday. And sometimes, again, I don't want to do... Now, I'm not going to teach you guys that because then, like I said, the whole idea of being experienced is you start to tweak with rules a little bit to make them slightly less foolproof, but to give you slightly more exits and hope that your risk to reward ratio will overshadow the more losses. I don't want to teach you too many of my tweaks right now. I want you to learn the rules as they are. Does that make sense? I want you guys to learn the rules classically as they are. And then as you become more experienced, you can start to tweak them on your own. But one of the ways that I tweak rules when I'm sure of a trade based on the daily bias and some other things, and the hour chart is taking too long, I think that by the time that hour candle closes, the entry would have passed me by, is I will take the engulfing on a 30-minute chart, never a 15. Never trust the 15. The 15 gets violated all the time. But sometimes if I think this hour candle is gonna pass me by, like this one did here. So this hour candle here would have made this stop, because I'm looking for 25 pips or less. This hour here would have made this stop more, right? I will see, do I get the same engulfing on a 13-minute chart? If I do, then I will hold my nose and enter. You will get a couple more losses, but if you're doing 4-1, 5-1, the wins will far outweigh the extra losses. The extra profit will far outweigh the extra losses. This here would have been the 30-minute engulfing. 1 second, everybody. So guys, today's a real proper example of daddy daycare. We will get through it. Me, you, and the boys. And so this here, like I was saying, would have been the 30-minute engulfing, which would have made the stop loss a lot more reasonable. And if you're taking that one, which is the one that I wanted to take, I should have taken, so if I wasn't waiting to bend price the other way in my mind, that gives you almost 3-1 that day. And then by the end of the next day, almost a 4-1. On Thursday, now, I'm going to be honest with you guys, right? If I have a week, let's see. If I have a week in which Monday doesn't fake out, there's a big trade on Tuesday and a fairly big one on Wednesday. Just from experience, me personally, I am staying out for the rest of the week. If I caught Tuesday and Wednesday, that's it. I didn't. But don't give the market your money back. If you see 2 days in the middle of the week push up nicely in the same direction, even if the third day pushes up, just quit while you're ahead. Take yes for an answer. Move to the side and go do stuff with your family or enjoy. Write your exams, prepare for your exams, write your papers, go to the park. Okay, I told you guys I was expecting this, right? Today. There we go. So it's happening exactly as I called it. Because it just, like I said, it looks like it's done enough moving up. Friday's going to be a slight correction. Anyway. But the same entry presented itself on a Thursday. If you missed these 2 days. Open. Drop. To where? This order block here. Let me go back to 1 hour chart so you can see. Right, that it's a full. So these two candles back to back form an order block there. But I also showed you there is a daily manipulation bar that covers that as well. Again, this is a day where the 1 hour ran away too quickly. If you drop down to a 30-minute, even that ran away. So perhaps Thursday would not have been a good day to get in. It hits there, closes, and then Friday that we've opened up the line. It spent the most of its time above it. It's come back here, and now it's dropping. And so, if today violates Thursday's low, sorry, which is this red line here, then we could be looking at a reversal next week. If not, we keep looking further up. That's the story of price this week on EU, and it was very predictable. GU was not as straightforward, but was still fairly predictable. So that's Friday, Thursday, Wednesday, Tuesday, Monday, Tuesday, Wednesday, Thursday, Friday. Now let's do the exact same thing. I'm going to draw the highs and the lows that we needed from the daily in hindsight, just because of time, right? But you know how we get them in advance. So that's Monday's low. You know what? Actually, since we're in blue at the moment, let's just draw out all the. So Monday opened up there. One second. So Monday opened up there. Tuesday opened up here. Wednesday opened up here. As I said, GU wasn't as straightforward. It was still tradable, just not as straightforward, which is why I prefer EU. EU, you guys know this by now, of course, that EU is always my preferred option. The trade I took this week was on GU because the EU moved too quickly on Wednesday for me. So I got on GU as the straggler. And then Thursday, today, sorry, that's Thursday, Friday opened up here. Right, now that we've drawn that, let's go back and draw the lows and the highs. So that's, 1 second. Nope, that's not what I was going for. What did I press? So I'm going to extend these out because if I don't delete this chart by accident, they'll be useful to me next week. Actually, no, I don't need to extend it. I just draw that line anyway. So that's a low. So we're going to put that in red. And we're just going to extend it to the next day. And then this line here. 1 second, let's get rid of that. That was a 1 I was showing myself, a stop hunt. So this Tuesday's low. This was Wednesday's low. Put this back, just draw it to the next day for the purposes of which I'm showing it here. Let's get rid of that as well. We'll come back to it because this was the block that held up price that day. That's, yeah, come back to it. It's Thursday's low. And we have, well, Friday's low is yet to be determined. Let's go to the highs now. This is Monday's high. So we're going to put the highs in green, same as for EU. I'm not going to repeat this with Swissy, by the way. You guys go do that yourself as your homework. Let's see if MetaTrader will behave itself now. Good. So let me lift the chart. Okay, so that's the high from Tuesday. That's the high from Wednesday. And that's the high from Thursday. So as you can see, EU or GU is not as cut and paste as EU was. But we can still tell a story. So again, now with GU, from last week on GU, we weren't quite clear what GU was doing, right? It had gone down south a little bit, and then we didn't see a daily engulfing. So you could have entered the week on GU unclear about the direction. However, the dollar index did give us a clear direction. It was coming down. There's no mistake about that one. The dollar index was coming down. But you could have been forgiven. But anyway, like we said, you would have wanted to stay away from Monday. Now, this is the kind of Monday that you would have cried about staying away from. And it happens. Like I said, you've got to learn to follow rules even when you think, man, if I hadn't followed it, I would have made money. That's fine. All right. That's an hour order block. You can refine it down there to that candle there when it pushes. So see that? That is beautiful. This would have been Monday. Beneath the open, expand to the upside. You could have been, okay, actually, let's go back and retroactively find the highs and lows we would have been interested in because of time. We could have found them very, very easily in advance, like I said, and I'll show you how to find them in advance. But because of time, I just want to see the ones that we would have needed. When you do them in advance, you have more on your chart than you need. But like I said, I'd rather have more than I need than less than I need. So we're going to change that to green because that's a high. Right. So I'm doing it in hindsight for the sake of time, but you can see how easily it would have been to do it in advance. You come into a daily chart. Price opened up the week here, right? Again, roughly 250 pips either way. 250 pips this way will take you down to this candle here. So you would do this candle even though it's more than 250. The upside 250 pips would take you to this candle here. So very simply, between that high there and that candle's low there, draw out every single daily high and low. That's it. It really is that simple. Just the highs and the lows for the daily candles. You don't need the bodies for the daily candles. You get the bodies from the weekly candles. But even if you actually if you had the time to draw the bodies on the daily candles, it would have been even, like for instance, that would have predicted that one perfectly. But let's see. So none of the, actually, no, that here, that line there, right? This is, you would have drawn it here. So you would have been a few pips off. You would have drawn that there, right? This one here, so to touch there. This one here, you would have drawn to there, to touch there, right? Cool. And also to touch this one there. This one here, nothing would have given it to you unless you had gone further back. So for the sake of not being pedantic, let's just delete that one because we don't see anything that gives us that one clearly, right? Cool. You'll find something if you go further back in time, but let's just delete that. That's that one there. This two, so these two are so close that I would have just put this one here, and I picked that one, And this would have been that one there, right? And then you'd have had a few that you didn't need. That's fine. You come back down to an hourly chart, and it's still prophetic. Look, you're still in business. You would have been off on the high of Tuesday by, so your Tuesday's high, you would have been off by 10 pips on Tuesday's high. Crimea River, right? Other than being off on Tuesday's high by 10 pips, that's all. On a day that went, let's see, Tuesday went for 100 and almost 120 pips. You would have been off by 10. Other than that, the rest of the week you could have predicted. Look at how accurate that is here. And remember, we adjusted this line to touch a candle's high or low specifically. Look at that there. Look at this here. This one you'd have been off on this one here by, you'd have been off on Thursday's high by 3 pips. Can I interest you in drawing lines, guys? Just let me know in the comment section. Can I interest you in drawing lines, please? Have you seen enough over the last few weeks to see why you draw these lines? I know they're annoying. I know they're frustrating, but you draw them. And so Tuesday would have been, let's see now. Would you have gotten a trade on Tuesday? So, let's see. So this is Monday. Let's assume you missed Monday, or that you could have gotten it, but let's assume because you were waiting on a Monday, you missed it. Fine. Tuesday, price opens here, goes up, comes back down, nicks it by 1 pip. Okay. There was obviously a trade on Tuesday. I haven't taught it to you yet, so I'm not going to mention it. But if you're an experienced trader, you can probably see what I'm looking at. Even that nicked it by 1 pip, ran off and cleared out the Asian high and came back down to the middle of it. Think of the Asian high as just a simple consolidation for those of you who don't understand how it works. Remember the pattern: consolidation, manipulation by 1 pip is still valid. Expansion, retracement back to the middle of the consolidation, target. So that's there perfectly. But let's assume you didn't take it. Let's assume you were waiting for the classic daily London Open pattern. Fine. Well, on Wednesday, Tuesday's low gets taken out, but then it closes above its own high. You guys will remember that this was the trade I took on Tuesday. Oh, sorry, on Wednesday. So I took this trade in GU on Wednesday. I think I got in, let's see, let's look to an hour chart. Yeah, I got in roughly around here based on this line here. Put my stop loss beneath this candle's body here, manipulation bar. And then I got out roughly about here. And I posted it on the Telegram group, if you guys remember. But you'll also remember that on Tuesday I said, watch this level. After I got out, I said, watch this level here, and I would tell you why moving forwards. Can you see why now? Look at this here. It's what you call a natural pivot. How did I know that was going to be significant? From here. Right? I am not resuming this trade north until price closes conclusively above that zone there. That's the actual, that's the full candle. If you take on a 1 hour chart, that's the full candle there. That one there. And so I've been out of GU since. Now, I could have taken the trade down, and another re-entry up. And then today we would have poked. This was my original exit here. I closed here, but that was my original exit. Fine. That would have hit on Friday, but I'm not sitting through. I'm a day trader, remember, and an intra-week trader. I'm not sitting through 48 hours of all this nonsense while it makes up its mind. When it closes conclusively above that zone, see, every time it comes to that zone, it moves up and down that zone. It keeps getting attracted to it. That's a natural pivot, as I taught you. And I predicted it from here. So when this day did not close above that level conclusively, I was like, nope, I'm not wasting my time. Let it dance around. When it makes up its mind conclusively, when one particular day closes above or beneath this level conclusively, then I'm getting back into GU. So yesterday, middled around, it was a Z day. You could have made money either way. If you came out here like Gerard, when you watch this, I know he's not online right now. Gerard and I took this trade together. We came out here on Wednesday. Just draw your Fibonacci high to low. Call that the expansion. Wait for the discount entry here, and you could have taken it up again, back through that, all the way to the 121, which was here. I chose not to do it. Or if you're just trading daily without the bias, well, that's your Asia. That's the open of the day there. Price goes above it. Find support, comes all the way down back to where? That red line. So you can see how one strategy's exit, open, find above the day's open and above Asia, right? Roughly around that level there into this support here. Come down back beneath the close of the open of the day, like the candle would form on a daily chart. Back to where? To that red line. That's why you draw them, right? This predicted it perfectly. That strategy's exit matches perfectly with this strategy's entry. The previous day expanded. The next day retraces to a discount to give you an entry. Perfect sweet spot between 38.2, 21.4. It expands to the 121 level where you get out. That's why when you start to become an experienced trader, you can share ideas to gain an understanding of the market's big picture. You don't let other people's analysis change your say. So you look at the analysis and say, okay, based on my rules, was there a mistake I made when I was analyzing that their rule is showing me? But if it meets the rules of your analysis, you don't change your trade because they're doing the opposite. Because two people could have walked into today with opposing strategies and both would have made money. The first person is saying, I'm taking an entry above the open of the day and above Asia, rallying to a previous daily low, tanking to a previous daily low and closing. And when they're closing their trade, the other trader will say, well, I'm doing a fib retracement of the previous day's range in the direction of the daily bias. I'm waiting for a discount entry. It comes between 38.2 and 21.4, and therefore I'm going to the 121 level as my first exit. That would have happened the next day. Both of you would have been fine. And of course, we're on a Friday right now. I'm not trading today. The dollar index is showing me that because we've had 4 straight days dropping, and this is the end of the week on a Friday, there's some news coming out today. It's likely that today is either a Z day or a consolidation or a reversal. If it's a reversal, I'm not trading the reversal till it establishes itself. In which case, this would have been the one in hindsight, but the 2 hasn't happened yet. So I can't trade the reversal. If it's a consolidation day, I don't want to be in it. And if it's a Z day, that's a day where price works both sides of the open and takes out stops both ways. So it looks like this, like a Z. When we say Z, this is what we mean. Price starts there, goes up, comes down, and then closes in the middle. So we call it a Z, right? Z. Problem is, it would have taken an order block high there, and another one low here, and then ended you back where price was. So it's kind of day where you can lose both sides or you don't make any profit significantly. Fridays are usually the worst candidate to be a Z day of all the days of the week. Mondays sometimes can be a Z day as well. Often. So no trade for me today. Definitely not on GU anyway. I'm not gonna do Swissy, but the same thing happened. Just look at it. Just do the same thing I did. This is Friday, Thursday, Wednesday, Tuesday, Monday. Open, closes, high. Just you see the same thing. And so overall, now let me show you what this looks like overall. Overall, this was how the week played out overall. Let me open another chart for that. If you're trading intra-week, this was the perfect week to have traded. This is how it looks like overall. No, actually, just cancel that. Just do that there. If you go on the 4-hour chart, so this is the weekly candle forming. Well, let's do the same principle we did for the daily, right? Price opened up here this week. So we're going to do purple because it's a weekly open. It opened up there, right? It dipped a little bit beneath it into where? Into this previous week's order block. Also, the open of the week itself was a low. And this is one of the exercises. I want you to do this, guys, every single week. When price closes, come and do this. And ask yourself if you can understand the story of the week. Even if you didn't understand it in the middle of the week, if you can get it post-week, it'll make you a far better trader moving on. Eventually, you will start to be able to see this in real time. But it's usually very clear at the end of the week what price did. Come on. Cool. It opened up. It nicked that stop loss, in which case that's the one into this order block. Excuse me. This was the 2. So that's the high that did it. That was the 2 there. On a 4-hour chart, if you went down to 1-hour chart, you would see on a 1-hour chart that you could actually have refined it to there. Came back in. Let's look at it on a 1-hour chart. We're going to close after this. So on the 1-hour chart, okay, I take that back. I'm wrong. Not that one there. This one there. Cool. That one there. All right. It came back in the week to where? To this entry here. And then for the rest of the week, it ran to this high here. And we'll see how far down it closes. That's it. Open, low, high, close. And you could have gotten it in one shot at the start of the week, which is why I'm beating myself up. If I simply wanted to take a weekly trade, one trade for the whole week. Yep, there we go. That's a 30-minute. This is the trade. This here was the trade, intra-week. It fit within my 25 pip profile. 1-to-1, 2-to-1, 3-to-1, 4-to-1, 5-to-1, 6-to-1, 7-to-1. Can I interest you in that? Ladies and gentlemen, that's how price moves. All right, let's wrap it up. We're back next on Sunday as usual, 9:15, to get the week started, to try and predict this moving into the next week. Take care, guys. See you. I'm off to go enjoy my son's birthday. Thank you for sticking through the several interruptions with him and his brother. Take care. All the best. Bye-bye.